Bitcoin may be about to enter into a disbelief phase. That is that phase where everyone's kind of thinking, you know what, this rally is going to fail just like all the others. We're still in a bearish situation. The bears are going to come back. They're going to savage everybody. I have post-traumatic stress syndrome from 2018. I don't know what's going on anymore, guys. It's a lot of people are in that kind of phase right now, but from a technical level, if we look at the sentiment charts, we could actually be entering into that disbelief phase right now for Bitcoin. We're breaking that down in today's video, as well as looking at some on-chain analysis, some quick updates on the crypto bill in the USA, as well as some quick Bitcoin ETF news. So make sure to stick around till the end of the video to get those sweet updates as well. My name's Lark. Every day I make videos talking about cryptocurrency investing, so if that is a topic that you would like to learn some more about, make sure that you subscribe to the Lark Davis channel. You're gently tapping on the thumbs up button, just for the YouTube algorithm, and click on the notification bell to know when I put out a new video. So I'll just go ahead and turn straight over the charts here to get started off with today. So we have now lost the 200-day moving average. This is our critical line. This is our line in the sand for Bitcoin. Above that line, the bulls are in control of the market. Below that line, the bears are the ones who are getting to feed. Now, this is the 200-day simple moving average. It's, doesn't define everything. Obviously, there's a lot of things going on here in the market, but I really like using this as just the simple. When the price is above that, it's bull time, baby. When the price is below that, the bears are in the driver's seat, and nobody likes bears driving cars. It's a dangerous situation. Now, what's interesting here is that, of course, we've now lost the 200-day moving average with yesterday's candle. Today's candle obviously opening below that. The current price rally did not see it close above it. And look, things could change very quickly, but we are coming into the weekend. Weekends tend to be a bit of lower volume times overall, so we could see some further price depreciation coming in. But one thing I want to talk about is that we've just seen this incredible, mind-boggling rally for Bitcoin here. Just look at this. That we've gone from 29,000 whatever dollars up to 46,000, almost $47,000 for Bitcoin. That's incredible. That's more than a 50% price rally in just about 2.5, 3 weeks. Crazy, crazy stuff here. Now, the interesting thing about this is that at no point during this time have we had any real significant pullbacks. We had a 12% pullback here. The current correction we're seeing is only about 6.5% from top to bottom. That's really not that much for Bitcoin. Bitcoin has a history of having much more dramatic pullbacks, 27% here, 19.5% here, 26% here, 31% over here. Although at the start of the previous run, which was basically December last year, we saw things really heating up, breaking over previous all-time highs. We saw 17, 12, and 9% pullbacks. So when the market was super, super bullish, everybody bought those dips up super quickly, basically. But right now, we're kind of in this situation where we've had a lot of people get really scared. A lot of people have PTSD. A lot of people are thinking, man, I don't believe this rally. I think that it's just the exit liquidity for the whales. We're going to go back down, and we could see a 20% price correction. Just for reference, that would give you a price for Bitcoin. If we did have a 20% price correction, we could actually right down here, it's very interesting, we'd actually see it coming right back down here to this previous area of price support, which would be the upper 30,000 zone, around $37,000 approximately. But we do have that PTSD in the market. I mean, look, if you just went through this, if you're an investor who bought here and you've just gone through this here, that's a trial by fire. Welcome to crypto. This was your initiation test right here. Can you survive this kind of situation? For those of you who did survive, congratulations. I'm happy you're still here. For those who didn't, well, we'll pour one out for them. Remember them fondly when Bitcoin is trading at hundreds of thousands of dollars in a couple of years. But this is a pretty serious event in crypto, and look, we'll see bigger price corrections coming in, so just be ready for those. That's what Bitcoin does. Bitcoins, and sometimes Bitcoin's up, and sometimes Bitcoin's down in dramatic ways, both directions usually. Bitcoin tends not to do slow and boring when the price starts moving. Now, one other thing I did want to quickly mention here, of course, is our impending bullish crossover. We're not quite there yet, but oh man, we're so close. We're so close. Our impending bullish crossover for the 50-day EMA, exponential moving average, over the 200-day exponential moving average. Exponential moving averages, of course, respond more to recent price action. Now this, when it plays out, probably tomorrow, it's a bullish thing. This shows that the market's getting bullish. We're having a positive crossover here for a major indicator, but that does not mean, I really want to point this out, this does not mean that the price is going to instant fricking moon. Very important thing to keep in mind. So let's go back and look at the previous crossover for the 50 and 200 day EMAs. Right here, look at this. Big sell-off, 20% sell-off in advance of that bullish crossover. Now, it obviously did end up being very bullish. We saw the price rally higher for basically a very long time. We were above the 200-day exponential moving average for a very, very long time. And I am, of course, very happy to see that we did see this really bounce of support here off of the 200-day exponential moving average, also lined up with the 100-day simple moving average, not on the chart here, but it was a nice bounce, I think, as a line of support here for the market to then push a bit higher. That would also, by the way, remember how I said we could see a bigger correction potentially coming in just because we haven't had one yet. I feel like we're due for a bit of a few red days coming up. And hey, you know, it's Bitcoin, so it might totally prove me wrong. But again, we'll keep an eye out for the upper $30,000 region because that's where the 200-day exponential moving average is, which has already proven itself as an area of support. So interesting place to be looking for bids if the price does come back down in the coming days, because we can see these bullish crossovers in the short term being almost a sell the news kind of thing where we see a bit of price retracement going on there. But eventually that does lead to a much more bullish market overall. It's not that these are saying this is what definitely has to happen. It's simply the price trends are indicating that is what is happening in the market. By the way, if you want to trade some Bitcoin, some Ethereum, some Dogecoin, whatever your fancy might be, the best place to do trading is over on Bybit. You can long, you can short, you can also trade spot markets with zero fees for market makers. And if you use the link down below in the description to sign up for your account, you get up to a $600 bonus plus an extra $1,000 trading bonus, depending on how much you deposit. Up to 1 Bitcoin gets you the $1,000 bonus. Lesser amounts will also get you some pretty sweet bonuses, $500, $200. So definitely worth checking out if you are a trader. Now, let's talk about some quick on-chain stuff here. So this is from Glassnode. Bitcoin has continued to flow out of exchanges in August at a rate of between 75 to 100,000 Bitcoin per month. You can see here, we had a lot of Bitcoin going into exchanges right there during the sell-off. Let's bring this up. Get me off the screen here so you can see this a little bit better detail. You saw this great accumulation time. As the price was mooning, people were buying up mega amounts of Bitcoin right there. And then as soon as the price started turning, everybody started panic selling their Bitcoin. Massive exchange inflows with people getting out of the market. Now, what has started happening is that about halfway through this bearish trend that we were in, people started accumulating again. So we saw accumulation starting here and here and here, and it really started picking up a couple of weeks ago as the price started bouncing up. And as the price started going up, as we started getting up to the upper $30,000 range, it started getting up to $40,000, massive amounts of Bitcoin being gobbled up off of exchanges as soon as that started happening. So investors are showing back up in a big way. They are buying a lot of Bitcoin right now. And as they say here, the magnitude of outflow is similar to the period between 2020 and Q1 2021, which is exactly when the markets started to moon like crazy. So that was a leading indicator that the big money is piling into Bitcoin again. We also have this here. This is the short-term holder NUPL chart. This is just traded back into its positive values. So you can see right here, we've just crossed back over the 0 line. So we've gone from basically a period of capitulation, which is when it's trading in the red here. So we've gone from this capitulation period, which has happened here, and you can see previous capitulation periods where afterwards the price does make quite significant rallies. Capitulation period here, very significant price rally afterwards, capitulation here, price rally afterwards, and so on and so forth. Now, we're just crossing back above that right now. As they say here, rapid recoveries like this are common in 2 cases. Bear market relief rallies. We're not in a wider bear market yet, so bear market relief rallies you can see here and here, or a disbelief phase of a bull market. So if you believe that we have now entered into a terminal bear market and that everything is going to crash by another 70, 80, 90%, then you might be looking and seeing, well, come on, man. This is definitely a situation where the prices are just going to absolutely tank. This is a sell the rally kind of situation, just like happened back in 2018. And that could prove to be true. Nobody can tell the future, right? But I am a massive bull on the cryptocurrency markets. I maintain my belief that what we've seen here, this is the price action here that we've seen, that this was, instead of being a giant new bear market, essentially was a mid-market bear cycle in a wider bull market, exactly like what we saw, for example, in 2013, or, for example, even some of the major longer periods of correction like we saw back in 2017. You can't see it very well on the chart here, but this was a pretty serious correction that happened right here, and it lasted for not quite as long as this bearish period lasted for, but for long enough to make a lot of people doubt what the heck was going on. So if we are in a disbelief phase of a bull market, that means we're getting ready for a pretty spectacular end of the year. You can see this here. This is the Wall Street cheat sheet. This is the psychology of a market cycle. So what we see here is the ballet of emotions that goes on throughout a market cycle. We've already seen a lot of stuff play out. We had the optimism, the belief, the thrill, the euphoria. I'm a genius. We're all going to be rich. Everybody longing the top, right? Prices start coming down. Oh, everything's going to be okay. This just needs to cool off a bit. And then, of course, the prices crashed pretty dramatically. The anxiety, the denial, the panic, the capitulation came in. Then the anger. Oh, there was a lot of anger a few weeks ago. Man, oh man, it was grim. Reading the comment section, and it was grim. Talking to people on Twitter, so much anger, so much depression, so much pessimism had come into the market. And now, of course, what do we see? Market psychology again coming in. A lot of people are going, well, you know, it's a sucker's rally. It's not going to happen. This is a state of disbelief. This rally will fail like the others. Maybe it will. Maybe it will. I cannot predict the future. The best thing I know how to do is to manage risk and to find investments that work out, right? But I think personally that we are in this disbelief phase right now. That's why we'll probably see a bit of a price correction coming in the not so distant future, which will make people think, well, that's it, back to bear market, baby. But actually, we might just be right here in terms of that, where we'll see a big price rally coming up. Because here's the thing. What if this was simply the bear trap? That whole period, that 2-month period, was just a giant bear trap. It was really the first sell-off of the bull rally. That was the bear trap. And now things are really going to go crazy in a way which you probably can't even imagine. If you weren't around for 2017, you probably don't know how crazy things can get, how crazy the mania can get. And look, it was pretty crazy earlier at the start of this year. I got to say, March and April were pretty nuts. We had a lot of media awareness and all this stuff. So to an extent, we've already gone through a bit of this phase. But if you, on a shorter time frame, if you move out to a wider time frame, we could just be at this first bear trap phase, and now we're slowly exiting out of that, and a lot of people are stuck in a state of disbelief. So we'll see, obviously, how it plays out, but just a bit of market sentiment thoughts from me here. Now let's talk about Bitcoin ETFs. So after Gary Gensler, the new head of the SEC, came out the other day and said, well, spot physical backed Bitcoin ETFs, I'm not so sure I'm excited about those. He said what I would like to see is Bitcoin ETFs backed by CME Bitcoin futures contracts. And so what have we seen? We've seen about 7 or 8, maybe 9 or 10 different companies actually come in and make applications to launch Bitcoin ETFs based on the CME Bitcoin futures. So obviously they think that was the signal from Gary Gensler that this is what he wants to see. This is the kind of ETF that his SEC is going to approve. And I don't like it. I don't think there's anything to like about a Bitcoin ETF that doesn't actually have real exposure to Bitcoin, because the CME futures contracts, they're paper. They're paper contracts. There's nothing backing them. They simply trade off of the price of Bitcoin. And this is a strategy that Wall Street uses in order to manipulate the price of assets, because they basically can come in and create a bunch of Bitcoin ETFs that could have a significantly large amount of Bitcoin value-wise trading, but it's all future stuff. It's all backed by paper and traded in dollars. There's no real Bitcoin being bought off the market. There's no real Bitcoin trading hands, but we have significant volumes that'll start coming in to these Bitcoin ETF products. And I don't like it. I don't like it. That's not the kind of Bitcoin ETF that I want to see. I want to see the kind of Bitcoin ETF that's backed by real Bitcoin, because that has value for people. That's something that's good for investors. It's good for Bitcoin. But this kind of stuff, this is Wall Street garbage, man. Wall Street garbage. The old bait and switch from Wall Street. Of course, Gary Gensler, he's an SEC guy. He's a ball player. He's playing ball with Wall Street. That's what the SEC does. They're supposed to be regulating those people, but instead those guys hang out and have drinks. They do. And it's an unfortunate reality. But that's what we're looking at right now for the Bitcoin ETF situation. I hope, obviously, still that we're going to get physical-backed Bitcoin ETFs approved. We have some great applications from some great companies. It's just ridiculous if they're not approving them. But unfortunately, Gary Gensler's SEC has signaled that they would prefer futures-backed Bitcoin ETFs, which is ludicrous in my opinion. And finally, let's talk about some quick updates on the crypto bill making its way through the U.S. Congress. Of course, has now passed through the Senate, but it's not over yet. Now it goes to the House. Now the new fight emerges to try and push your elected House members to try and support the positive amendments that are going to come through. Now, we have to, of course, see some new amendments put forward by some House members. We do have this story that a Pelosi ally has asked the U.S. House Speaker to modify crypto language in the infrastructure bill, particularly around the wording of who will be considered a broker or not, because it's the wrong law. It's the bad legislation trying to make app developers, stakers, miners into brokers and having to go get a broker license is redonkulous. So hopefully they do fix the language as it passes through the House, and we get some more common sense, more positive regulation coming in for the crypto amendments in the infrastructure bill. But regardless, as I say the other day, regardless whether we get the good or the bad version, it is definitely a made it moment for crypto. They're literally doing what they've been asking for years, legislating crypto, regulating the markets, providing regulatory clarity for all these players who've been asking for it for years. I just hope that regulatory clarity is not a pile of steam and crap, and that the regulatory clarity is actually something decent that the industry can work with and that won't put undue burdens on your average cryptocurrency users. Anyway, just my 2 Satoshis for the day. What do you think? Where are we at on these market sort of sentiment charts? Do you actually think that we're kind of entering into that disbelief phase where everyone's kind of thinking, this rally is going to fail like all the others, prices are going to go down? it's over, man? Or do you think that it's just in that perfect situation where we're going to see the markets go crazy? Curious to know your opinion down below in the comments section. Thanks so much for watching today's video, and peace out till next time.